Activando el audio. Okay, everybody, we're getting ready for our Tuesday meeting. Our Tuesday meeting on tax strategies is brought to you by Strategic Tax Solutions. We're first going to do an audio check, audio visual testing. 1, 2, 3, testing. Looking for some indications. How's it sounding? Everyone out there, how's it sounding? How's it looking? Is my video slow? Is it working out okay? All right, testing 1, 2, 3. Can you guys hear me? All right, it looks like things are coming through on LinkedIn. Let's hear. Do we have audio and visual in YouTube? Do we have audio and visual in Facebook, Twitter? Is it coming through good? Or do I need to switch my internet connection? Okay, I think that we're doing okay. Well, very good. All right, everybody. Well, we've got a great day before us, and here we're coming up on the holidays. I know a lot of people are busy, but still doing year-end tax planning. Want to go over a few of the things that we've received this last week in regards to the mineral strategy, in regards to micro captives, in regards to the restricted property trust. We're going to cover those few items as well as any questions during the question and answer period that people might have. I'm just waiting for some of our viewers to keep on trickling in. I can tell you right now, we have some people on Facebook. We have some people on LinkedIn. Nobody on YouTube yet. Twitter, we have 2 people. And it looks like here in the Zoom, we have some people showing up as well. So all of that is very good. Kind of let them all keep on coming in. All right, I have sound check coming in from all social media outlets. Everything is coming in well. Happy that everybody's joining us right now. Happy that the sound is working. Sometimes when I'm in a remote location, it's difficult to make sure that it's all connected, that it's all syncing, as well as that the internet service is good enough for us to have a good transmission. And I'm talking about a remote location today because I'm in Mexico, happen to be in Mazatlan, and it's a fantastic city. I'm going to tell you a little bit about Mazatlan while we wait for everybody else. Mazatlan has always been a lesser known resort city. Oftentimes the cruise ships, they might spend 2 or 3 days in Cabo, half a day or a day in Mazatlan, and then go on down to like Puerto Vallarta, other places further on down, and so on and so forth. Be in Mazatlan the shortest stay, what have you. It does have a population of between 500,000 and 700,000 people, according to the last census. And of course, during the holiday season, like right now, everything in town books out solid. There's almost no room in the inn and nowhere else to stay. However, if you drive up and down the Malecon, and if you go anywhere else in town to the outskirts or to the center downtown area, you'll notice that there's more construction than ever before. Very wisely done, the mayor of Mazatlan decided to take advantage of the pandemic when there was less foot traffic here, and they took their 10-year master plan and accelerated it to get done in about 3 years what they had planned to do in 10 years of reconstruction, redevelopment, remodeling of the city. They were able to improve the streets, improve the lighting in the areas, and improve a lot of the tourist sites so that individuals coming here from outside actually could have handicap access, wheelchair entrance capability, and a lot of things that just didn't exist before. So now you could say that Mazatlan's become more of a modern city with that respect, with its accessibility and its just with how the city has been beautified. There's been a beautification effort that they accelerated during the pandemic, took advantage of the time that there were less people here. With that being said, last year they announced the groundbreaking of something that they've been trying to get for decades. And that was a deep channel seaport. This deep channel seaport, not only will it bring in hundreds of people, new residents during the construction period, but there's also a railroad a rail spur that will come in that will then connect to Guadalajara and then all the way up to Kansas City in the United States and everywhere in America. And that's incredibly important for a small, little, lesser known resort town like this, which is now exploding because of industry. And that is why you also see so many developments up and down the road. Why am I talking about this today? Well, for me, there's two sides of a coin or two sides of money. One is the side that you have to share with the government, your taxes. The other is the side that you get to spend or that you get to receive. Now, of course, you can also put money to work for you. And ideally, that's what a lot of investors are doing right now in places like this, places of opportunity, where something good is going on and there's something to benefit from it if you participate with the community and help it grow. Right now, there's a number of buildings where investors putting in their money are getting 27 to 35% return on their investment. Sometimes it's contractually promised. Sometimes it's more of a joint venture where they're all at risk, but they're in this venture together and they might actually get more than that. And so right now, in fact, talking to some people here from people that I've known from last year that just purchased a piece of dirt. A couple individuals were very astute and purchased some land that they just sold this year, like last month, and they sold it for 3 times what they purchased it for. Now, not everybody gets that lucky, right? But these individuals were having a fantastic time because they made a very wise, prudent selection of land to purchase that they knew would be very attractive to some other people that they also knew. They held it for a year and then they sold it. Well, good for them. They didn't even have to do anything to the land other than buy it and hold it and then sell it. And, not everywhere in the world is like that right now. In fact, there are several areas, countries, in fact, that are suffering very high inflation, several areas in the world that are struggling. But for opportunities like this in cities like Mazatlan, there's definitely moments where people can participate and benefit greatly because of it. Now, that brings me to some of the conversations we're going to talk about today. I started out talking about Mazatlan, 1, because I'm here right now, 2, because I have clients that have reinsurance companies, that have deferred sales trusts, that have other types of business assets, and they're using some of these assets to invest across the border, not only here in Mazatlan, but in Colombia and in other Latin American areas, as well as there's some interest in Dubai, there's some interest in a few different countries. And so with your U.S. holdings, you're not limited by the borders and what you can invest in. And through the proper vehicle, we usually do a Reg D investment, a 506C, so that we can talk about it in forums like this. And individuals with their U.S. businesses that say that they sell a piece of real estate today, it was a great time to sell, but not a great time to reinvest and buy. So they opted out of doing a 1031. They might have done a deferred sales trust. And then they can use the proceeds to reinvest in other assets that are not subject to like-kind rules, they're not subject to a 45-day window or 180-day window, and they can actually come on down here, take a look at some of the opportunities, pick one, and because of the fund and the structure that we set up, their US dollars from their US properties that they sold can be reinvested through the fund into assets here that, yes, there is monetary risk, there is currency risk, the currency exchange, peso typically devalues against the dollar, etc. But instead of like a 9% real estate REIT in the United States, they can get something closer to the 24 to 35 to 46% rate of return with projects here. And there's a number of different ways to mitigate other risks. In fact, something that a lot of people have asked oftentimes is, hey, can an American own property in Mexico? I heard there was a law against that. And at some periods of time, if you were so close to the beach, etc., yes, there was, but that has been overcome by forming partnerships with a local or by doing different things. Now it's a lot easier than that. Typically, you just need to have temporary residency or full permanent residency. It's kind of like a green card, but for Mexicans. And you have legal rights here that are recognized in court. You can send people to collections and you can own property, which is incredibly important so that investors or somebody that represents the investors, such as myself, can own property here in Mexico with their US money and receive their returns back and, of course, receive it back in dollars. Another interesting thing is a lot of properties here, not everything, but a lot of opportunities can be invested with in dollars and returned back in dollars as well. So that's something incredibly important to know and understand, that we did talk about currency risk, but if it's buildings and real estate, a lot of times the raw materials, the iron, the cement, all these other things can be purchased with dollars. And when you sell it, depending on who you're selling to, whether it's local nationals or if it's Canadians, Americans, other foreigners, you might be able to collect it all back in dollars and not have to lose anything in the exchange. We all know that the banks take an arm and a leg with any kind of currency exchange that they might perform on your behalf. And when we're talking large amounts of money, that ends up being a very large sum that they receive for providing this fee or service. So the more that you can avoid that, the bigger your rate of return ends up being. And of course, if you're getting this very large rate of return back and you're able to shelter some of it with an insurance company that you own, like a micro captive, or a deferred sales trust that you might have, then you're able to collect more of that money and put more of it back to work for you while deferring the taxes owed until some future date when you actually take it out for personal reasons. And that's incredibly important. We do have a few people that have joined the Zoom. Now, people join the Zoom panel when they, like me to call on them to participate, or they have questions, or they like to participate. And I'd like to say hello to Tina Allen, all the way from Orlando, Florida. And my goodness, this is like the busiest time of year ever. And so I appreciate you, Tina, for being here today. Would you like to say hello to the audience and maybe just tell the group one more time how you and I met?
Hi, my name is Tina. I'm in the greater Orlando area, and we met through seven-figure firms, and was in that for many, many years. And Jake was one of my mentors, and worked with him on several clients that we had that had large businesses, sold them, and we used some of the strategies last year. And one gentleman or couple that sold their business, we actually saved them about $500,000 cash in tax last year. So they'll be excited.
Well, and
we got an extension because of Hurricane Ian, so we're still doing 2021 1040s. So,
and you got to take every opportunity you can, right? And it's interesting. The more we work together, the more that we share, the more that we collaborate, the more our clients benefit. And that's always fun. That's always important. And as well, it's always fun working with Tina. She has a way about her that not many people can get away with. She can pretty much yell at her clients and they love her for it. And so if I did that, I think I'd just get slapped around a little bit. But Tina has a very good way of working with people and helping them understand the importance of making decisions rather than just delaying needed action. Because if that needed action doesn't happen, they pay way too much in taxes. They pay more than their fair share, more than they should. And we can't let people do that, can we, Tina?
No, that's why I smack in the face and just say, okay, well, just give 30,000 away. I've got a fire pit. We'll just go burn it.
Now we do have a list of things.
Do this.
We do have a list of things that we were going to talk about today, but now that we're talking with Tina, it reminded me that it's not always about tax savings today, but sometimes it's about asset protection and tax savings in the future.
Yes.
And sometimes when we talk that way, we're talking life insurance, in the sense that there's a lot of serial entrepreneurs out there right now that, even though we mentioned there's places of high inflation, places that are struggling, individuals whose careers and everything else are changing dramatically, there are people who are literally coming from nothing and making big names for themselves and are doing very, very well in business. And they're skipping a few steps. They're rounding a few corners, cutting them a little too short. And it could be detrimental to their family and to their legacy and to other things unless they button things up, because people like us feel that there is a need to be an advocate for the wife and the children and the employees who do not have a voice of their own. Sometimes when it's all about what the employer and the business owner can say and do, and oftentimes the employer and the business owner is just too busy to do everything. And too busy to
understand running the business, and so I busy running the books and the rest of their life.
That's right.
They don't think about these things,
Not just running the book and the rest of their lives, but ensuring that all those others in their life are taken care of.
Are protected.
And it's not always about life insurance, but right now it is, because we just helped an individual make a very critical and important decision, and that was to fully cover, in the event of death, the revenue and the income to pay off debts, as well as to cover at least the next couple of years' livelihood, same quality of life for his family, which is incredibly important. And something that we've discussed now, I think 18 months ongoing, and it was finally time. And so that was a really good thing that we did. I feel good about that, Tina, and I'll tell you why. There was a client that I met with, and he said, yeah, we should probably get some life insurance. We should talk to you about that. And I said, yeah, we should. I mean, when are you not busy? Well, it's just, really busy time of year right now. Maybe in the spring. Well, the following month, he passed away in an airplane accident. And I did not do my job by insisting that I get things wrapped up, even though he's incredibly busy. And so you never know, because life is fragile. You never know when somebody's moment might come. And in the moment that they're thinking about it, that's when the iron is hot, and that's when you should strike, and that's when you should help them. And it's not about how much money they pay or anything like that. I've never had a widow or dependent child complain that, oh, my dad had whole life, or my mom had universal, or they had term. Like, nobody cares what kind of insurance it was. Just the fact that their parents loved them enough, or their loved ones cared enough and planned well enough, or had somebody that helped them plan, that there was something monetarily left over, even though the person that they really love and care about is no longer around. In fact, the only thing, honestly, and this also hurt, one time delivered a check for $500,000, and the spouse asked me, is that all? Because that didn't even cover their debt. And so it is incredibly important. It doesn't really matter the type. It's just the fact that you have the coverage, right? Now, there are retirement plans and different things like the restricted property trust, where we use life insurance in a different way, use it as an asset, not just to provide asset protection, but business continuity, and as well as partnership retention. But in addition, as a retirement plan, a cash value asset that you can access tax-free, right? But in general, when we're talking about estate planning, family legacy planning, what do we leave besides memories after we die? A lot of times we're just talking death benefit. And should, in the case of death, what benefit economically is left to the family? That is something that everybody should just have buttoned up. Even if it's the cheapest, most inexpensive term policy available, I'd recommend paying maybe $2 more and making it a convertible term, right? But just that one little extra benefit, so that at any point in the future, should your term come up to like expire, lapse, what have you, that you have that conversion feature, to where even if you're in stage 4 cancer or whatever, you can convert at the health rating you received during the first underwriting of that term policy. So that's the only thing in regards to term. If you're only getting term, make sure that it's convertible, so that you have the availability at any given time during the period of the term to roll it over. Now, not all term policies are the same, so check with somebody, right? Figure out all this fine print and details, somebody that you know, like, and trust, somebody who's an advocate for you, somebody who's not just selling something, but somebody who's helping you make a wise purchase. For Christmas, make sure that you're protected, you and your loved ones. Buy a life insurance policy, even if it's just for yourself. Anyway, that message is something that just wasn't planned. It wasn't on the agenda. It just kind of came out because conversations that Tina and I are having with clients, and it's a good thing to be thinking about this time of year. Good thing to make sure that is wrapped up. And if nothing else, it's the gift of peace of mind that we can all have, knowing that if something were to befall us today, tomorrow the economics of the family are taken care of. So all of us should also review and reconsider what it is that we currently have, if we do have some, if it's enough, if it's sufficient, or if it's coming up to expire, or if there's something better out there that you could roll it over into, etc. I mean, all of those are just optimizing. The worst thing that we can do is not have anything. I even had a client ask me, well, Jake, why in the world would I need anything when I don't owe anyone any money? Well, you don't. But do you do business with anybody? Well, yes, I do. In fact, I have 5 partnerships. Oh, okay. Are you critical at all in those 5 partnerships? Well, yeah, pretty much in 4 of them wouldn't run without me. All right. You don't owe anyone money, but you are in 5 partnerships, and these four of the 5 will run without you. So what are your partners going to do if you die? And it was just crickets. All right. Could they replace you very easily? No, not really. I mean, they'd have to hire people away. Well, do they have a sinking fund set up, or do they have anything in place to pay a lot of money to hire somebody away to give them that bonus, or to scour the country and find the right person? No, they don't have any of that. Margins are tight. Well, you know what you can do with tight margins, something that doesn't cost a lot comparative to the actual expense it would be? Life insurance, key man policy. So we talk about family, we talk about legacy, but there are so many different business purposes for ensuring the life of a critical person, a critical employee or partner, friend in business, so that there is a continuity should that person not show up tomorrow. Anyway, good stuff, right? Restricted property trust, we passed the deadline. We have some clients that we're still working on with restricted property trust, but others that came to me literally yesterday that said, hey, I understand that we're past the deadline. Let's get working, because let's make this a 2023 thing, and that's great. Restricted property trust is a retirement plan. It's a retirement plan where the asset inside of the retirement plan is a whole life insurance policy that is part of a mutual company, which means that there are dividends. You put your money in, you have your guaranteed features, and then you have, in addition to that, dividends that supercharge the growth of the policy over time, especially when you overfund it and put in as much money as you can, so that the paid up additions essentially pay for everything after a certain funding period has been provided. And so typically, 10 years paid up and done and deductible to your company. There are little pieces that you pay taxes on throughout, but by and large, you put in, let's say, as an example, $100,000 every single year for 10 years. So you put in $1 million, and you might pay taxes on 30% of that, not all 100 of it. Typically, you're like, this individual is actually in the state of California, so he was looking on $1 million that he'd normally take, that he'd pay over half of that, over $500,000 in taxes. By putting it into the retirement plan, he's able to grow a tax-free asset where he ends up with more money there than he put there, and he only pays taxes on 30% of it, not the whole thing. And then there's a little teeny transfer tax to get it out of the restricted property trust when funding is done, and he wants to take it personally, and he wants to start an income stream to himself that is tax-free, something of that nature. A lot of things that people do with life insurance anyway, but now he can do it with life insurance that was deducted by his company, put into a retirement plan, taken out of the retirement plan. Now he can use it for personal anything, right? It's a very wonderful, tested, and has won the test of time. It has actually been through a variety of different audits, and it is one of the only strategies out there that has 100% track record. So for those who qualify, those who have a business where their taxable income has put them into the highest tax bracket personally, it makes sense. This could be a home run hit for you, for the business owner, to start funding more in a form that is deductible, more efficient, deducted, not deferred, but deducted and then exempt in the future from taxation as you're growing a tax-free asset, which is a whole life insurance policy. Minerals. We are still accepting applications even to today. Some people have said that they would stop after the 16th. That's in a couple of days from now. However, we are still accepting applications for individuals who would like to participate in a charitable cause. They are doing so with a non-cash charitable contribution. They are participating with individuals who are mining minerals, specifically volcanic ash. And this volcanic ash is basically turned into fertilizer. There's a refining and a processing process of which the end product becomes more retail and has a fair market value greater than your participation at the raw good mineral extraction level. Okay, so let's say you put in $100,000, and through the refinement and through the processing, now we have all these bags of fertilizer rather than just a big truck of fertilizer, right? We've got these bags of fertilizer that are going to Haiti to be used by a foundation that's helping people there become independent and self-sufficient and grow their own fruits and vegetables and things of that nature. It's a good cause, and you're able to get a write-off, a deduction of 4 times the raw good cost. So you're able to donate it at its fair market value of when it's all ready and done, and you get, in this scenario, a $400,000 deduction, subject to a 30% limitation of your AGI. So we have to make sure that for full benefit this year, so that you don't have to roll over some of your deduction to next year, that we're calculating the numbers right so that you're able to maximize your 2022 deduction for contributing volcanic ash to this foundation in the country of Haiti. Obviously, all of this takes place in the United States and then it's shipped there. A couple questions that have come up in regards to 831Bs. And this is exciting. This is good. We have people who have asked about 831Bs or micro captives, which are basically your small little insurance company that you can own that is captive or exclusive to you and your operating businesses. You're not offering insurance to the general public. The general public cannot buy insurance policies from your insurance company. This is an insurance company that you're forming under IRS section code 831 subparagraph B, where you are able to put money away for a rainy day. This is you self-funding, or you're starting to self-insure up to a certain part, and you do it through a form of a reinsurance company. You belong to a pool. You have to work with a third-party provider that provides underwriters, attorneys, adjusters, all these people that help you maintain the integrity of an insurance company. And this being a strategy that has been abused in the past, it doesn't have a 100% batting record. Some people have had this disallowed because they've done it wrong. They were abusive with how they did it, or they try to do it themselves. It's really hard to do it yourself and belong to a pool, which is one of the requirements. So make sure that you use an appropriate third-party provider. Check into all of the fees. I've done a review of probably 12 or so different providers, and some of them to this day, in my due diligence, I'm still not sure how they charge their fees, in the sense that one client, we had to look into his banking after he'd had it for 2 years and review all the different ways. There were more than a half a dozen different times that he was being billed for different things. It was just incredibly confusing. So for your own peace of mind, don't use a provider that's confusing. Use somebody who's simple, who's transparent. If you like a list of recommendations, reach out and call us. We have some of our people that we recommend to everybody without hesitation because they're so good and easy to work with. It is a strategy that costs money. Obviously, if it's something that has been abused in the past, it might be something that is highly scrutinized in the future. So if you're going to participate in this, make sure that you're ready at any given moment to be able to hand the book over to the IRS and say, this is what I've done, this is all my documentation, and here you go. And of course, we help our clients with that all of the time so that they don't have a headache or a hassle when the IRS might come knocking at their door. Which comes to another item. The IRS has been increasing their workforce dramatically. In fact, there are people interviewing right now. And in large part, that's because half of the IRS's workforce never actually came back to work after the pandemic. You know how the entire IRS offices were told to work from home, but their fax machines and their printers and everything still only work at the office. So who at the IRS has an email address? Literally, like, there's a lot of inefficiencies, a lot of things that just don't work. And in the heart of archaic compliance or, measures that are taken so that there's not, IRS workers that go rogue and commit fraud with client information, etc. They're not allowed to do a lot of stuff from home, but they were told to work from home. And interestingly enough, now that the pandemic's over, and the pandemic's been over for a long time, half of them have not ever come back to work. They might still be getting paid. None of them have come back to work. Well, half of them have not, which is, again, one of the big needs for our federal government in hiring more and more and more of them, and why in some of these legislative bills that have passed, there's been an increased budget for them. It'll probably be a couple of years before any of that becomes actually very effective and before they implement new processes and procedures so that they can operate like a business, or at least better than they have. Some of the headaches that we're seeing that clients are having currently is the fact that the IRS typically has like a 6-letter or 7-letter process where they send out a notice and they ask for information, they give you 30 days, and then they send out another notice. Well, it's almost like they're tired of sending out notices. Like they just skip the first 4 steps now, and they send out a settlement letter. Well, why are we settling when we haven't even talked, when you haven't even asked me for documentation? If the IRS sends you a settlement letter, you do not have to settle. You don't have to just write them a check. You need to get with somebody like Tina or somebody else here in the forum that can help represent you before the IRS and provide the documentation. Again, they're just skipping their first so many steps that they usually take because they're understaffed, overworked, and way behind. And so in order to catch up, they're just skipping to step 4, which is like a settlement letter. That doesn't mean that you have to settle. It doesn't mean that you actually owe them money. Whatever it says that you're settling for, provide them with the documentation. If you're a do-it-yourselfer, that's fine. Provide them with the documentation. Call them. Get them on the phone. They do answer the phone from home or from wherever they're working. And so you might be on hold for an hour or 2 or 3, but it's worth it because some of these people are writing checks for 20 grand or more or whatever, right? And is 3 hours of your time worth 20 grand? I mean, it should be for most people. And so hire somebody to do it yourself, but pay attention to what it says in the letter. And a lot of times they're using scare tactics. It's almost like the state of California, which is notorious for this, but now the IRS is starting to act this way too, which is kind of new. Typically the IRS is really good to work with, and they still can be. You just have to get them on the phone. You have to go through a process. They're cutting corners a little bit. They're speeding things up. They're accelerating stuff because, again, they're understaffed, they're overworked, and they're way behind. So that just means that there's more work for us in order for us not to have a bad experience. Should you be one of the unlucky people that receives a letter? And again, typically there's a series of letters that happens before some kind of settlement, whatever. You don't have to settle. If you don't own anything, you don't own anything. You might just have to prove it now. And that's okay. It's worth proving it so that you don't have to just needlessly send in a big old fat check. I talked to a client 3 days ago in Los Cabos. He's an investor in the state of Arizona and Texas, has a really big fund where he manages real estate. And he was one of those. He got a notice letter and just sent them 20 grand. And you don't have to be like him. He didn't have to send in the money. He did send it in, but he's now trying to see if he can't get it back. Because you should. He didn't owe the money. Those are my updates for today, calling in from Mazatlan, Mexico. If there are any questions, we are now at the question and answer period. We are ending short today. We do have a few events here locally that I have to participate in personally. I have to show up physically. I know that I kind of live through Zoom practically, but every now and then I get to be face-to-face with people, and this is one of those opportunities. So if there are any questions right now, feel free to let me know. If not, we can end sooner than later and wish everybody a Merry Christmas. We will likely cancel the rest of the Tuesday meetings through the end of the month. I might show up just to wish you Merry Christmas and things of that nature, but otherwise, as far as the Mastermind events, we'll begin them in January. First week in January, when it lands on a Tuesday, we'll jump on another Mastermind event, start off the year right. But for any questions, any comments, any concerns, any client questions that have come up that sometimes are difficult to answer, feel free to post in the chat. Feel free to ask on LinkedIn or Facebook. And I apologize if my video is coming through a little bit slow on LinkedIn. The recording will be at speed, so feel free to watch the recording afterwards. All right, I don't see any questions. Thank you everybody for participating, for attending. Tina, always good to have you here. I always appreciate when people show video. It's always nice to actually talk to somebody. And of course, go do something fun. Life is short. Live it to its fullest. Be responsible, get everything done, fulfill all your commitments. But, this Christmas, think about you. Think about those that you love, and let's make decisions that are good for everybody. And again, Strategic Tax Solutions, wishing you all a Merry Christmas. Bye-bye.
Recording stopped.